Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we are here with the CEO and founder of VRIC Media. And so how you doing today, Jay?
I'm excellent, Darrell. Good to see you, man.
Oh, man, that's good to hear. It's good to hear. Obviously, the Jay Martin Show, folks see you, they engage with you often. And so I want to get your take on your top commodity for 2026. So many different analysts and researchers and investors that we've interviewed on the show have been giving their top picks for 2026. And so I just want to hear what Jay Martin's thinking for 2026. What do you think is going to be the top performing commodity?
As an equity investor, more than a futures trader, Darrell, I look at the companies that are producing the metals I like. And so that's where I tie my top performers to. And, you know, the big shift or trend that we're going to see further develop in 2026 is this massive pivot we've seen in political sentiment towards our industry. And I'll get to your question in a second, but the reason I want to start with this is because anybody who's been an investor in the mining sector for the last 15 years is very familiar with how the game's been played. The sector's been demonized by political leaders all over the developed world. No country's been exempt. It's been vilified by media from all of those same countries, and no media outlet's been exempt. If it's anything that defended the climate narrative, it was demonized in the media. Because politicians hated it and media hated it, investors didn't want to allocate money to the metal sector. And we've just woken up, I mean collectively, and I'm talking about our political leaders have woken up in the West and realized after demonizing an industry and starving it of capital for so long, they now own almost nothing. And so there's this massive sense of urgency to pivot the sentiment and begin aggressively trying to take control of the supply of so many critical metals. And this has been the driving force behind the United States government becoming an active investor in our industry, writing checks into mining companies, in some cases becoming the biggest shareholder, MP Materials, right? One of the US only rare earth miners and refiners. The Department of Defense is now their largest shareholder. In 2026, I believe we're going to see the US government start writing checks and investing in US-based primary silver producers. I think that's what's going to happen next. We haven't seen a deal done there yet, but I think it's going to happen. If I were to pick one asset class, Darrell, for 2026, that's the one I'm looking at. It's primary silver producers, companies whose production comes at least 60% from silver. There's not very many. It's a very uncrowded bet and therefore a very high concentration of value. You know, most silver comes from zinc or copper or gold mines. There's very few that actually come from silver primary mines. That means there's very few companies that actually respond to the price of silver going up. Because if the price of silver goes up, but your primary metal that you're mining is zinc or copper and silver secondary, you can't really respond to that price like a primary silver company can, and the equity prices don't respond the same way either. And so primary silver producers or companies with primary silver assets, key point, that are located in the United States or friendly adjacent countries. Think Mexico and Canada first and foremost, but there's others to look at. That's where my head's at. That's where the crosshairs are for me this year, Darrell.
Okay. So primary American silver producers. So I'm curious if there's any particular part of the chain that you're looking at. Are you looking at all of them as far as, you mentioned producers, so obviously the mining companies, and I mean, some of them have performed pretty well this year, last year. And I remember watching this interview with Eric Sprott recently, and Eric Sprott mentioned Highcroft Mining because he's very bullish on silver. And that stock just went to the moon. I was just looking at the chart there. As soon as the interview came out, the stock just popped and went crazy and parabolic. And so just curious if you're looking at any other areas of the chain, as far as exploration, developers, royalty and streaming, or is it mostly just producers?
The sweet spot for me, Darrell, is like the unfunded developer with a path to funding. So this is a company that's found an economic, competitively sized and graded resource and they either have the cash or are on their way to securing the cash to get that mine built. And this hasn't been as secure of a bet for the last 15 years because that permitting process between finding the deposit and actually building the infrastructure to extract it has been the most uncertain part, almost as uncertain as finding the resource to begin with, right? It's like, even if you found something over the last 20 years, what's the probability that a Western government was going to let you build a mine? It was very, very low. We've seen many projects just stall out. And that's the big sentiment shift that we're witnessing right now. And I think we're going to see that really hit the silver sector in 2026. And so, there's some great run companies in the silver space in the primary category. Michael Connor, great CEO of Vizsla Silver down in Mexico, and maybe he's going to build the largest silver mine in the world. We'll see what happens there. The Golden Triangle up in BC has been developed a lot by Dolly Varden Silver, now Contango Silver and Gold after that recent merger, and they really expanded that company. But the CEO, now president, Sean Kuhn, has done a great job over 5 years just continuing to expand the ounce count, the silver ounce count, in his Golden Triangle projects. And now with the merger with Contango Silver and Gold, they have acquired 2 producing mines in Alaska that can cash flow the build of their mine in the Golden Triangle. So that's what I'm looking at. Vizsla Silver's raised the cash. Contango Silver and Gold has access to cash flow to fund the build. And those are the kind of companies I like. They've found the economic deposit, size and grade look good, and they either have the capital or access to it to get the next step done.
Okay, gotcha. So you mentioned silver being your top pick, and obviously if the United States government is going to start investing into these American silver companies or producers, I'm curious in how much upside do you think? I mean, silver has already went up, over 100%. I think it was 160% at one point. I'm not recalling the numbers exactly for 2025. Obviously, it's been placed on the critical metals and minerals list of the United States government. And there's a lot of interesting dynamics happening there. Obviously, we have the silver price in Shanghai on the Shanghai Gold Exchange, where silver's trading over $80 an ounce currently. And then you have the U.S. Where it's been struggling to get above a certain number, and a lot of that has to do with bank paper contracts and stuff. And so I think investors want to know, a few things. One is because we obviously speak to the stackers, those that actually preserve their wealth in physical silver, which the silver price going up benefits them. But then also you have the equity investors who are really just trying to get more leverage to the metal and have significant gains in that way. And so just curious in your perspective on upside for silver.
Yeah, I mean, it's a great question, right? And you're right, there's a few perspectives coming to the table, and they'll have different view on what's happening. I think first and foremost, you got to be really clear on what your time horizon is. And I'll just share mine. I'm not a short-term trader. I don't try to time markets. I don't try to catch swings in prices. I don't trade share prices, any of that. And the simple reason, Darrell, is just because none of my mentors did that, right? And so the way I was educated to invest was the opposite of that. It was to make a smaller number of highly concentrated bets over a 3 to 5 year time horizon. And all of the biggest wins that have actually changed my life in the market occurred over that 3 to 5 year time horizon. And they were very large bets. It was a high conviction bet I was making on a company, right? Again, not trading a share price, but buying ownership in a business. And that is the way you should think about it. I've shared this analogy many times, but it's worth sharing again. For most investors over the entire course of their career, the number one asset they end up owning through the entire duration of their investor career isn't some stock. It's their house. It's their principal residence, not a rental property, the house they live in. And the reason that's the case is because it's the one thing that investors tend to buy and hold for 10 plus years, right? Because they own it and they think about it like ownership. Often investors in the equity market, they don't think that they're buying ownership in a company. They're just trading a share price, and they think they can outsmart the market and everybody else. That strategy very rarely works out over a long time horizon, over a long period of time. And so what's the upside in the silver sector? What I'd tell you is that we're early days in terms of general public interest. And you and I in the industry, and a lot of people that watch this show or my show, maybe they've been investing in the mining sector for 3 years, 5 years, 20 years. I don't know, but any of those time periods, they'll remember days where nobody cared about our industry. I mean, back to until very recently, our industry was hated by the trifecta, politicians, media, and investors. Like, it was demonized across the board. And so we get a little bit of love right now. Yes, the price of silver has appreciated a lot, and I think it's a bit hot, and a correction would not surprise me. But we're nowhere near to general interest or bubble territory. And I say that just as a symptom of being in so many investor groups, signal chats, WhatsApp groups, this and that. And if they're not mining specific investor groups, the conversation about precious metals and base metals is still virtually non-existent. It's not happening yet. And when it begins to, we could have a conversation about where we might be in this cycle. But I think we've just crested the moment where our political leaders and our multinational companies have begun to realize how insecure their supply of critical metals is. And they're just taking the first steps to change that. But this is a really long game. I mean, we're trying to correct 20 years of sins here, right? When it comes to ownership over the resources that we need to build the future we've been promised or that we're planning for. It's going to take about that much time to undo that or build a better strategy. And so the reason I explain it like that is because I think there's tremendous upside inside the precious metal sector. We can look at gold too. I'm very bullish on copper. We're talking about silver. But inside those secular bull markets, there's massive volatile swings that occur because traders get in, they overbuy, then they oversell, then they overbuy, then they oversell. A headline comes out, it scares people or gives them FOMO and they jump in or jump out. And there's all this short-term activity inside the long-term trend. And that short-term activity can be really hard to stomach, especially if you haven't documented your time horizon when you build a position in a company, especially if you haven't written down exactly why you thought that company was a good investment. What is it about the management, the asset, the jurisdiction, the industry that convinced you to buy ownership in that business? Because when you hit these volatile swings, say your time horizon is 5 years, but 8 months in, you see a big correction, 30%, something like this. That'll shake most people out unless you can go back to your thesis and say, why did I build this position? What am I expecting might happen? And how long do I think it might take for those things to occur? And if you can go back to that thesis, that evidence, and remind yourself, oh yeah, I wasn't investing for an 8-month time horizon, so should volatility inside of 8 months scare me? Well, not really. Is my 5-year time horizon still intact? My 5-year thesis? It is? Okay. Right? But having that document is like hyper important. And as you know, like we teach that at the Commodity University, but we didn't invent the wheel. A mutual friend of ours, Rick Rule, still, right? He's been in the industry for 50 years, but he still doesn't take shortcuts. He writes himself a 2-page essay for every single position he builds. Lobo Tigre, just the same. Different format, same principle. And myself, the same. Different format, same principle, right? You got to document that. And then if you're clear on your time horizon, you can wait it out. But that's where the real money is made. It's not making a 6-month bet, hoping that you got pricing and timing right. There's tremendous upside in the silver sector. Tremendous. It's going to change lives. I mean, gold's where the sure money is, I think, over the next 10 years, but silver's where the big money is. And that's typically been the case in these precious metals rallies. And so, but you got to be ready to stomach the volatility. All of the biggest wins in my investor career, Darrell, came after a terrifying correction and only after 3 to 5 years of duration. And so if I realized, that 1,000% return or that 15 or 20 bagger, it was always after a point where I really began to question my confidence in that decision because the price had come off 20%, 30%, and in one case, 40%. But it's like, okay, we weren't investing for that time horizon. And so I look at my portfolio today, I'm psychologically preparing for that moment to arrive. When I look at it and say, oh my gosh, was I right here? Was I smart to put this capital down? And I'll have to go back to those documents, revisit the thesis, ask myself the tough questions, has something changed? And if it hasn't, in my time horizon, then I can sit, right?
Yeah.
You need that documentation.
Okay. Yeah, appreciate you sharing that.
And why should you look at Vizsla Copper? Well, firstly, we have a huge resource base already. There's nearly 4 billion pounds, 2 million ounces in the ground at good grade in an excellent jurisdiction, in a place where you can now develop projects. And we're seeing Canada, BC particularly, showing a real commitment to providing development companies with mining permits. You can find more about Vizsla Copper at vizslacopper.com.
So I want to dive into a couple things there. So one, obviously, Rick Rule, mentor, both of us, friend. So Rick often, every time, well, not every time, but as I've interviewed him over the years, whenever he has his research process for a company, he has a net present value of that company, a stock price. And oftentimes the share prices would move ahead of that net present value, where he's like, okay, these shares are getting ahead of themselves. He would often trim some off the top. And that happened in the uranium sector, especially in 2021, 2022. Uranium stocks were just going bananas, right? And Rick was like, hey, these are getting way ahead of itself. And this was before this whole political sentiment changed around uranium and nuclear energy and such. And so Rick knew to like, okay, these are way ahead of themselves. Let me go ahead and take some money off the top. And some other investors, right, they would, or speculators or whatnot, they would be upset whenever they see the share price decline because they held on thinking that the uranium was going to go to the moon in the next however many years. And so obviously they had a short-term, time frame for that investment. And so whenever some of your equities that you own move ahead of its net present value, what do you do in that situation? Are you just sitting on it, or are you taking some cash off the table and trading alpha for beta? If you're trading alpha for beta, what does that beta look like? When Rick took alpha for beta, he put it into physical gold, put it into some of the bigger royalty and streaming companies, Wheaton Precious Metals, Franco. And so I want to get your perspective on that.
Yeah, that's a great question, because we're kind of living through a moment like that in the market right now. And over the last couple of months, a lot of decisions like that, right, have landed on the desk. So two things I'd say is looking at a sector you feel bullish on over the next 5-10 years does not mean today's a good time to buy, right? And that's one conversation you have to have. But if it's something you already own, where you feel like sentiment's got a bit heated and the share price has run a bit faster than you think it has, sometimes the market hands you a gift like that. And the first goal for especially, now just to preface, we're talking about speculative positions. That's what I'm referring to here. And I think what you're referring to when a share price begins to run ahead of what you believe the value of the asset to actually be, because largely the share price is just like a floating abstraction. It does what it does, but the value of the company is often very decoupled. And when it becomes extraordinarily decoupled to the downside, meaning the share prices run ahead, you should always be looking for your opportunity to de-risk. This is a crazy risky business. And yes, you can achieve enormous gains if you can stomach the volatility and do your research and wait and all of this. But given the opportunity to withdraw some of your principal, all of your principal, like take that, because getting back to the best strategy in this industry is duration. The only way to achieve duration is by not getting cleaned out and staying at the table. Like back to Rick, how has he been an investor in this industry for 55 years? It's by never betting more than he could afford to lose and always taking profits when the opportunity came up. Doesn't mean he's selling his entire position. It means he's withdrawing a little bit of risk off the table. And that's something investors should always think about, because there's a new bus every 15 minutes. And when the share price tends to appreciate, we often feel higher conviction than we did when we purchased that stock, right? So if I bought shares in XYZ company at $1 and 8 months later it's trading at $1.90, I might feel even more convicted and want to hold even more than when I bought the stock, right? But in reality, what I should be doing is looking for a way to take some risk and principal off the table. You know, how you reinvest the beta, it's kind of a personal choice. I like to sit on cash right now because I think, quite frankly, we're going to see some amazing buying opportunities in the early stage gold, silver, copper, mainly gold, silver this year. And I want to have liquidity available for those. And Having said that, I know, something that, Rick has done is allocate that into companies like Agnico, Wheaton Precious Metals, Newmont, companies that he said at the Commodity University Mastermind. These are companies I'm comfortable holding until I'm gone, right? Like they'll be left to the estate. And that's good insight into his time horizon. But for me, like in this market, in this stage of my life, I feel quite confident in the stable side of my barbell, which is Agnico and Wheaton Precious Metals, physical gold, my principal residence, things like this. I want liquidity available so I can strike when opportunity arises. That's also where I'm at in my investor career. I want that optionality immediately available to me.
Mm-hmm. Okay. And when you're investing in these more early stage companies or more speculative positions or whatnot, how are you treating the dilution risk? And so we've had multiple companies come out and raise capital and in various different ways. And it's been kind of interesting because the companies that have raised capital in this particular market, share prices rebound significantly. Like, so people see that as a buying opportunity. Folks that already own shares go and buy more because they're like, okay, I can still, get my costs down. And so just curious how you process that.
It really matters where the money comes from. So yeah, whenever a company raises cash, they're selling shares to do that. So they're letting shares in their own business go and they're taking dollars in exchange, right? That's the trade they're making. And that dilutes, just like when the Fed prints money, it dilutes the value of the dollars in your wallet. When a company raises capital and issues more shares, the value of your shares become less because it's been diluted, same as diluting the money supply. It's exactly the same principle. So it's really important to think about it that way, but also understand the difference between good money and bad money, because our sector suddenly is catching a bid, meaning companies are able to raise cash today a lot easier than they've been able to for about the last 15 years. And a lot of companies, therefore, are taking the first money available to them because it's been so long since cash has been available. There's no shortcuts here. You have to kind of know who's who in the industry to know who's offering good money and who's offering bad money. But the difference is this. Copper Giant just raised $12 million. And a big chunk of that came from one of their core shareholders, Frank Giustra, who's also the principal and founder of Fiore Group. Now, Frank is a guy who's probably investing in Copper Giant because he believes it can become a producing mine, and that's going to take 5-10 years to do so. So you can have confidence that his money is probably long-term. But a lot of capital groups don't think that way, and they're more predatory in their approach, or they don't understand the long-term cycles in the mining sector. And so companies have to be very careful, because if they took a $2 million check from a shareholder who was planning to liquidate those shares as soon as they became free trading. See, when you finance a company in a private placement, typically the shares you buy are on hold for around 4 months. 4 months plus a day is very common. Meaning that if I invest in a private placement today, I can't trade those shares tomorrow. I can't trade them in a week or in 2 months, but I can in 4 months. And the problem with that is that so can everybody else who participated in that private placement or that financing. So everybody who wrote a check into Copper Giant's $12 million financing on the same day suddenly gets access to their free trading shares. And this happens with every junior mining company. On the same day, however many investors participated in that financing get access to their free trading shares. And very often what you see is that a large population of those investors dump those shares or begin selling them on that day. And so after a company raises capital, about 4 months later, consistently what you see, if they took money from bad groups, short-term predatory groups, whatever, is on that 4-day mark, you see a lot of selling pressure arrive in the stock. And that can last for a week, that can last for a month. The company will usually try to clean that up and buy some of those shares back or find buyers from their shareholder base. But it's tricky, right? It's a very tricky thing to do. It's less tricky if you take capital from the right people. And that's why one of my core criteria when I look at investing in a business is who are the shareholder base and where can this company get capital from in the future. I want to know they have access to the right kind of capital. And so we talked about Vizsla Silver earlier in this chat. And, one of the reasons they've been so successful is because of Michael Connert's relationships through Inventa Capital, through his mentor, Craig Perry, who founded ISO Energy. I'm failing, but, he's got he's got $3 billion companies on his resume. And when you have that kind of success, your access to capital goes way up. Therefore, your cost of capital goes way down because you have more options. And Michael's been able to participate in that network and raise smart money for Vizsla Silver. And I feel very similar about companies that come out of the Fiore Group, out of Frank Juster's office, because these are very well-capitalized, well-networked businesses. And when they need to raise cash, they don't have to take the first money that lands on the desk. They can be very specific and take the smart cash because they have options because of their network and their affiliation with the Fiore Group. And so it's like right next to the people, Darrell. Like number one for me is always who's managing the business. And that's got to be number one, because it's like they're going to have an adventure with your money. Do you trust these people, right? What are their plans? And do they have the stamina and the durability to keep swinging when plan A and plan B fail? Because they will in this business. It's a very tough industry. Are they going to get up and hunt down plan C? I want to invest in those very durable, tough entrepreneurs who surround themselves with people that fill in their weaknesses. But after that, I want to know when you need cash, like what are your options? How networked are you, right? And who are you friends with? Who's in the shareholder base already? And where's that cash going to come from? Because that selling pressure post-financing is very real in this business, and it can be quite damaging.
Okay. So when you're looking at ownership, share ownership, what's a good percentage you're looking at for insider ownership? So CEO, directors, and such ownership of the company. Obviously, that's can be very different for like a small company like Empress Royalty, which is a royalty company which has a lot less staff than some of these other companies that are trying to build out a mine and such. So insider ownership, and then when you see big players like VanEck or Fidelity or Tether or Fiora Group, whoever, right? How much weight are you assigning to that? Like, okay, they have access to big capital.
Yeah, a lot, and there's no like benchmark number. I would say like what percent of the business does the CEO need to own for me to be interested? Because there's just going to be a difference in the percent of ownership between, first or second time entrepreneur and Ross Beatty. Like there just is, right? Ross can afford to buy more stock in his own company than a more junior entrepreneur. But you may find the same heart and dedication in that junior entrepreneur. And I'm not opposed to betting on the rookie. I mean, for the majority of my career, I was the rookie soliciting bets, so I respect that hustle. But you got to see skin in the game. There's not a benchmark number, but 100%, I want to see a scary number behind that CEO, because relative to their compensation, I mean, that's, I guess, it's all relative, right? I want to see a CEO who is clearly compensated by performance of the share price, not their salary. And that's the differentiator, right? If you see a guy who doesn't own any stock, but he's somehow clipping a $500,000 salary, that's toxic, and just stay away from that, right? And you should see, even if it's a junior entrepreneur who doesn't have the cash to take big pieces, or maybe what you think is a big piece, maybe to them it's a big bite, but to you, you're like, it's not material money, I don't trust this guy. What percent of their salary is coming through options, right? Instead of cash, not in addition to, instead of, right? Are they comfortable taking equity in their own company as compensation because they're so married to the outcome, and they know their success is tied to the success of shareholders? And that's to summarize it, I mean, that's the question you want to answer. How is the CEO going to get paid? Hopefully the same way I'm going to get paid when the share price goes up. And if not, we're in the same boat.
Gotcha. Okay, so I do want to talk about copper. Copper's been on the list of multiple people that we've interviewed for a top performing commodity for 2026. And I know that you study the copper industry and this commodity and such. And so what's happening there? Why do you think people are making this call?
Well, the short story is that copper demand has been growing with incredible consistency for the last 50 years. If you look at global copper demand from 1970 to today, decade over decade, we increase our demand for copper by about 3 to 5 million tons per decade. And that's really important to pay attention to because that line has been very consistent. The reason that matters is because supply met that demand pretty much on the nose every decade, 1970, 80, 90, 2000, until about 2012. And then a little gap started to open up. By 2015, it was larger. 2020, it was large. And it's only getting bigger because in 2010, we stopped investing in supply, but we kept needing it. So demand maintained, but supply slowed down. And that's when you see those two lines begin to decouple a little bit. And so people point to the copper sector usually with two different theses. One is that due to electric vehicles, due to renewable energy infrastructure, due to AI data centers, we're going to need more copper than we ever thought possible, and demand's going to go parabolic, and there's no way we can keep up. And that's argument one. The other argument is that, yeah, that might be true, but first, we're probably going to be hit with some kind of a globally coordinated recession. And when that happens, demand's actually going to be crushed. And so all those dreams about what might happen won't materialize because we're going to be fighting for our lives back to 1930s style depression, right? I don't know which of those two things is more likely, if either, right? Probably somewhere in the middle is where we tend to land. But my point is that it doesn't matter because if you look at the last 50 years, you'll see all of those events that might happen in the future happen in the last 50 years. We've seen massive depressions. We've seen massive inflation. We've seen massive innovation. Like everything that might happen in the future, we saw it over the last 50 years, right? The dawn of the personal computer, smartphones, the urbanization of China, right? We also saw massive crashes, right? In the 80s and the dot-com, like we've seen it all. The 2008 GFC, it's all happened. Whatever might happen in the future, like it's happened recently in the last 50 years, but the demand for copper remained consistent regardless. It didn't hockey stick up. It didn't fall off a cliff. It remained very consistent. And so that doesn't make me right, but I like history as precedent when I'm thinking about the future. I find it more reliable than any I gathered the data and here's my forecast. It's like, okay, that's great. And you should do that work. But can we look at some past examples too, please? Like, how about that, right? And that's why I like studying the past to give me better perspective on what might happen in the future. And if past is precedent, the future is very predictable because demand's going to continue. But we're it takes a very long time to build a copper mine, much longer than it takes to build a gold mine. And it's much more expensive. And so for us to refund the supply gap that we haven't funded since 2010, find those projects, bring them online, capitalize the builds, it's a best case scenario, 10 years, best case scenario. And that's if everything goes right, all right? More likely it's 15 to 20, and that's more probable, right? Let's say we hit the best case scenario, we're still in a massive copper deficit environment for the next decade. And obviously that's very bullish for the price because, copper demand is inelastic. It's kind of like silver in that regard. Like it doesn't matter so much what price does, we still need it. Like if the price of gold tripled tomorrow, people would buy less of it. That's just a reality. They would buy less gold because the price went up. But copper is a necessary non-discretionary economic input. It's the conductor. Anything that requires electricity demands copper. So any business manufacturing anything to maintain operations needs it, regardless of what the price does. It's inelastic in that sense. The demand doesn't go up and down so much with price as other things do. And so as a result, that's the case for copper. And I see that demand, that lack of supply, driving price a lot higher. I don't see it going up in a straight line always. I mean, I feel like it's redundant at this point to say that on a channel like VRIC Media talking to you, but it should always be stated, right? That in these secular bull markets, expect swings up and down and volatility in the interim. But I'm thinking, and just everything I say is based on that, 3 to 5 or 5 to 10 year time horizon.
Yeah, and what CEOs are you really following with copper? So obviously Craig Perry, Vizsla Copper, Ian Harris, Copper Giant. So you have these smaller projects, and then you have, the Robert Friedlands, and the other bigger companies, Freeport, McMoran's, and such. And so just curious, which ones are you kind of following the most for this thesis around copper?
Well, you just mentioned two names that I'm invested in, but I would just say it's because success begets success in this business. Meaning, a CEO that's found success once, built and sold something of value, built a mind around an asset they discovered, is more likely to find success again in the future because they build a reputation, they get an increased access to capital, they attract better talent, and they can do more with that. And so their probability of winning in the future tends to go up. And if they hit it out of the park once, maybe it's a fluke. They do it a second time, now they should have your attention. Third time becomes a trend. Ross Beatty is on his 14th company. 13 of the companies he built have delivered 1,000% returns for shareholders. Like, he's the broken slot machine, the classic example of that success begets success theory. You mentioned two people that I see as very similar, even though they're at very different stages in their career. Ian Harris at Copper Giant and Craig Perry at Vizsla Copper. But I like them both for similar reasons. Now, Craig Perry, as we talked about already, has already put together a few billion-dollar companies. Vizsla Silver being another, right? ISO Energy Next Gen. So he's got the track record. He's been there, done it. His access to capital reflects that in his network as well. It's no shocker that it looks like they're discovering something big with Vizsla Copper to me. It's kind of like, well, no, of course he is, right? That's what Craig tends to do. But if you look at where he's at, it's all about betting the jockey in that scenario. Vizsla Copper is a very early stage company. It does look like the discovery is there, but you're more betting on his pedigree, reputation, network, discretion, and decision-making with a company at that stage. Ian Harris, he's a more of a junior entrepreneur. His project is the Mirador copper project in Colombia. Sorry, the Macoa copper project in Colombia. The Mirador was the copper mine in Ecuador that Ian was integral to put into production. So why I like a guy like Ian is because he's trying his second crack at another copper mine, meaning he's already done it once in Ecuador with the Mirador project. This was Ecuador's first copper mine, actually, and Ian was integral getting this thing into production. And now he's taking a second crack at it. He's looking to make that a two-point lead for himself. So he's had his eye on the Macoa project in Colombia for many years. He aligned with the right capital groups, being back to Fiore Capital. What's interesting, Darrell, is like as we talk, it's striking to me how few names I mention. And that's because as a very entrepreneur-focused or person-focused investor, the longer you're in the game, the fewer names you're willing to invest in, and you tend to stick with the same people again and again and again. And again, like not reinventing the wheel, man. Rick Rule has shared this many times on my channel and probably yours. If he had only ever invested in the same 3 or 4 entrepreneurs over his entire career, he claims he would have made 10 times more money and worked 10% as hard. Now, finding those 3 to 4 entrepreneurs isn't a sure thing, and that's why you have to kiss a lot of frogs before you find the princess. But the point is, when you begin to uncover who those people are, you should stick with them, right? And I say the periphery of my focus in the industry has gotten more and more narrow as I've been in the business for a longer period of time because I've become just deeper invested with the same people and whatever they're doing next or whatever they're investing in next. Back to Copper Giant, Ian Harris's company, he believes he's found a billion-ton copper deposit, and it's very near surface. The grades are about 0.5% copper. So the grades aren't a showstopper. It's the size that matters with this thing because a billion-ton copper deposit near surface joins a very small club globally that exists. And so back to the massive copper deficit that we're just beginning to walk into, that's going to become very dire in the years ahead. A project like that will become incredibly valuable. And so, watch how politicians treat that company. I'm very curious because the national value of an asset like that is very different than it was 10 years ago. Not just because we don't have the copper we need, but also because of how political sentiment has shifted and politicians are thinking very differently about assets like that. So I'm investing, I'm not telling anybody what to buy. None of this is investment advice. You and only you are responsible for your investment decisions. I am a shareholder of Copper Giant, and that's part of the reason why.
Okay, so it's important that we pivot to this. I think it'll be good to touch on this because you interview a lot of geopolitical analysts and folks that are very well versed in that arena. And so recently with the extradite, I guess it was he got extradited or extracted or kidnapped, however you want to frame it, President Maduro of Venezuela by the Trump administration. That's been hot topic news, and it's interesting because you on the Commodity University, you have a course on Commodities 101, and you talk about how politics and everything that just kind of happens in the world all revolves and comes back to commodities. And now there's a lot of talk about oil. There's a lot of talk about the gold reserves that Venezuela has and such. And so I'm curious in your perspective and how you're processing this and what you're picking up on.
Well, the oil narrative is important to touch on because it's relevant, right? And it's definitely part of it. And yes, Venezuela is a Western Hemisphere country. The evolution of how people interpret the Monroe Doctrine has come to a place of if it's in the Western Hemisphere, it might belong to the United States, right? That's kind of where we're at. And so that just is what it is. That's not what the Monroe Doctrine was meant for. It was meant just for more sovereignty in the Western Hemisphere and lack of influence by Europeans in the Americas. But that's changed over the years. So that is what it is. The energy, it's deepest oil reserves on the planet. But more important than that is the type of oil that Venezuela has, because historically, the United States has produced a very heavy crude. And that's what's come out of Texas. That's what comes out of Canada. And that's why when you look at the refinement capability in the United States, the refiners in Louisiana, in Texas, in California, those are very expensive multi-decade projects that were built to refine heavy crude. But post-shale revolution, the oil that America began producing was a lot lighter than that. It's a very different product and it's refined differently. And so the refinement demand in the United States for foreign oil has gone way up. And that's why since the shale revolution, you saw Canadian oil imports into America as a percentage of total American oil imports move from 15% up to 61% because they need that heavy product. That's what they built their refining competency around. You can't just rebuild new refiners overnight. And so there's been a higher demand for that heavy crude. And that heavy crude is what Venezuela has. And so it's not just energy security, it's the type of oil that Venezuela has is exactly what America's refiners need. And the vast majority of America's refiners are right there in Texas and Louisiana, right? Just on the north coast of the Gulf of America, Gulf of Mexico, just straight shot south is Venezuela. So the proximity is incredibly convenient in terms of feeding those refiners and, the big economic engine that is the whole Gulf. I mean, this is where the majority of America's economic value is in the mouth of the Mississippi River and where it hits the Gulf of America. And so that's the energy piece. But, the other side of that, Darrell, is like the role that oil has played in American security is bigger than just energy security. It's actually like, call it just broad economic security or dollar security. Because the world trades oil in US dollars post 1974 and the petrodollar with Nixon and Kissinger, that provided a steady appetite for American treasuries because everybody in the world was transacting oil in US dollars. There was always a surplus of dollars going around, and the logical home to invest that was in the US Treasury market. And think about the US Treasury market as nothing else than funding of America's credit card. And as long as there's funders for the credit card, the lifestyle can continue regardless of how much more they spend than what they generate, right? As long as there's appetite for American debt can finance American lifestyle, even if America's producing less. So maintaining that flow of cash is incredibly important. That's why, we see de-dollarization of commodities occurring on the margin all over the place, right? Like just what was it, 2 months ago, BHP out of Australia agreed to sell iron ore to China in yuan. Only 30% of orders, but this is new. Right up until that point, 100% of iron ore shipped from BHP to China had to happen in dollars. China put their foot down and said, we're not doing that anymore. We want a better deal. And BHP agreed that moving forward, China could buy 30% of their iron ore from BHP in yuan. So that is, an example of the de-dollarization we're seeing occur in the commodity sector. But nothing is as serious to the United States as oil is. Nothing in terms of oil for dollars, dollars for treasuries, treasuries for the American dream. I mean, that's what it all comes down to. And so when you see oil begin to trade outside of the dollar system, that's problematic. And the big thing with Venezuela is that because they have the deepest oil reserves in the world, 20% of global oil reserves are located in Venezuela. They have enough oil to fund de-dollarization for decades. If Venezuelan oil started regularly leaving the country, trading in yuan, that would be incredibly problematic in terms of funding competitive currencies against the dollar. This is like the big holy grail for de-dollarization that the Americans just can't let happen, all right? Now, the petrodollar system, sure, academically is over now, right? But it's not really, right? And America will go down fighting for that because that is the linchpin. And if that system dies, if there's no more appetite for American treasuries because the commodity market gravitates somewhere else, that's the problem. And Venezuela was a big Achilles heel in that trend. And so, that there was no, we could get into all the other narratives around Venezuela. I don't know that we need to, but that's the big one. That's the big one for sure.
Okay. Yeah. So I'm just curious in your perspective, because President Trump did say the oil would be for Venezuelans. I kind of think it's maybe a mix of both for Americans and Venezuelans, because he is allowing the big oil companies to go in and develop that resource. So I'm curious in your perspective there, because I do think that politicians lie to us quite a bit, or they have ulterior motives, right? And you mentioned a big one, right? When we're talking about de-dollarization and the rise of BRICS and things of that nature. Also, it has me thinking about OPEC reliance, how, I know in the 70s when we had the oil embargo and OPEC, or the countries over in the Middle East, they decided to not ship their oil here. And there was huge issues there, national security and such with the United States. And so being able to cut that out or, rely more on Venezuela would make sense and eliminate a lot of that risk as well. And so I'm curious in your perspective there.
Well, you're right. And, America has achieved energy security today. They are the world's biggest producer of oil. But that's a ticking clock because they don't have the deepest reserves. So that is not a long-term sustainable plan. It works for right now. If the Saudis were to cut off oil, America would be okay because they're the world's largest producer. But they lack the sustainability. That's what Venezuela can solve, 100%. And that's, there's something there. The oil will be for the Venezuelans, maybe, but it was 2018 when Maduro said we're going to decouple from the US dollar. We're moving away from this relationship and we're going to begin looking for buyers of oil outside the US dollar system. And today he's now facing prison time in New York. Okay, well, that was 2018 and today we've been
not Rikers.
Right? Yeah, right. Yeah, exactly.
I think it's federal. I think it's federal though, but yeah.
There's precedent there though, right? It was 2000 when Saddam Hussein said the same thing. It was 2003 when he was pinched out of his country, right? It was 2011 when Gaddafi said the same thing. 2011, Americans are in Libya, right? Spreading democracy, right? This is not new. It's not a new situation. You have a major oil producer make a threat to move away from the US dollar system, and a few years later, they vanished. There's nothing new about this. And, is it to free the Venezuelans? Okay, well, removing Gaddafi was to free the Libyans. How's Libya doing? Well, it wasn't good under Gaddafi But today in Libya, there's open slave markets. It's not a better country. It's far worse. Maduro was a terrible, incompetent, oppressive leader. There's no question about that. He's a bad guy. And he crippled the country. I've been to Colombia many times in the last decade. The flood of Venezuelan refugees into Colombia is a constant point of tension because they got nowhere else to go. It's something like 15 to 20% of Venezuelans have already fled the country. So it's not a good place. Absolutely. Maduro's not a good guy. I mean, he was a bus driver prior to becoming president, right? He was the yes man for Hugo Chavez, and that's his entrance to politics. Not competent, not smart, none of it, right? So yeah, he should go. But now, can you just imagine, Darrell, waking up on Sunday morning and you brush your teeth, you go downstairs, you pour a cup of coffee, you open your phone, open up Twitter, and you read that the president of your country had just been kidnapped overnight and was now on a plane facing trial somewhere else. And you're like, we don't have a leader today? What on earth, right? And this is not, again, back to him being an incompetent leader. There wasn't a succession plan, right? They've since sworn in the vice president, but it's not like there was an agenda here, right? This is not the kind of structure that he organized. And so you've got a country that was already fairly lawless, already fairly criminal out of necessity. There's no economy for most people to participate in. And now there's just more of that, right? And so I don't think the Venezuelans win in this situation. The oil is going to go back to Venezuela. No, the winner here is Chevron. I mean, that's for sure. That's for sure.
Yeah.
And that's just my stance on it. There's no precedent of regime change where the civilians of that country are the winners in that scenario. I don't know of any scenarios where that's been the case.
What would you say would be I think this is a difference, but Venezuela used to be a very wealthy nation. The Bolivar was very strong. They had a lot of wealth off of oil and such, and obviously that was under their own leadership. And so now you have an external nation, powerhouse nation that's coming in, that's saying that, hey, we're going to build this out and such. And so that does change the dynamics a bit. So what do you think is the difference between how it was before in Venezuela and, how this future may look?
Socialist governments. Hugo Chavez, 2000, when he came to power. And that's when everything began to fall apart, because you're right. And again, there's precedent for that too. You can look at a country like Argentina, who we all know our entire life has been a basket case economy with hundreds % inflation. But it also wasn't that long ago where Argentina was one of the wealthiest countries in the world. And it was for very similar reasons that Venezuela was because they were very endowed with natural resources. In Argentina's case, it was minerals and agriculture and a tremendous coastline to ship that product to the world. But after the 1929 depression, every economy was crippled, and Argentina decided to elect a socialist government who promised to intervene and fix everything. And it cost them nearly 100 years of productivity. And Venezuela was very similar. Socialist government elected, industries nationalized. I mean, it's sort of comical when you hear the American sentiment that Venezuela stole the oil, like that was our oil, we're going to get it back. And you're like, what on earth are you talking about? But what they're talking about, and it's silly, I agree, but what they are referring to is the extraction and refining technology, right? That was infrastructure that was funded and learned by American economy, right? And so that's what they're referring to. This was American-built industry or finance, and then it was nationalized by the Venezuelans. So it was stolen in that regard, right? Yeah. The way they say it, it's like, how did all that American oil get inside your country? But that's the narrative there. So that's it, man. It's again, there's precedent for it. What began with Hugo Chavez is still going with Maduro. I don't think it gets cleaned up inside this decade. The objective viewpoint here is just straight power politics. It is a stronger country leveraging over a weaker one. That's it. It's not about oppression. It's not about the fact that Maduro stole elections. Of course he did. Yeah, great. Like many countries that America does business with don't have free elections. Saudi Arabia being a key one, right? Yep. We don't bat an eye. It's good for business, so we do business there, right? It's not about that. It's not about the oppressed people. It's not about people suffering. If it was about humanitarian issues, like there's many other places that are way worse that you could look. I mean, anybody watching this, just spend 10 minutes looking into South Sudan right now and then tell me that's not. If you really were concerned about people, or that's not where you would go tomorrow, right? But it's not. It's Venezuela for very different reasons than what we're reading about and being sold, but that's the real politic.
Okay. So, I mean, and this gets into like a bigger discussion, which I think we could kind of go there a little bit. So there's throughout American history, there's always been a fight to try to keep communism out of America's backyard. So we've had the Iran-Contra scandal with, I believe it was Nicaragua. And then you have these other nations, which I know Venezuela has like ties with China, Russia, and such. And you mentioned like one of the biggest failures was socialist government or communist government, or however you want to frame it. And so, do you see this kind of fight continuing? I mean, has it ever stopped? It seems like it kind of cooled down for a while. Like, you think about going back to the Iran-Contra scandal with Reagan. You're like, okay, yeah, that was in the 80s or whatnot. But then you had the 2000s where, you did have the war on terror or whatnot. And so just curious in your perspective there.
Unfortunately, I think incidents like this instigate activity like that. When you have the imperialist nation show up and extradite the leader, take control without permission, without conversation or any kind of a process, inevitably some people may celebrate that, right? They may say Maduro has been the worst thing this country's experienced in 20 years and we needed this change. But a lot of people won't. A lot of people will see a foreign nation covertly entering their country in the dead of night and kidnapping their leader. And that's how they'll interpret this. And there's a history of this kind of nationalist guerrilla rebel groups all through Latin America and in Venezuela too. And so, yeah, I think that's why the occupation argument lands in dead space for me, because it's always sold as something that'll be very simple. We're gonna run the country in the interim. That's what's been said right now. It's like, okay, show me an example. Again, where's the precedent? Where's the precedent of that ever working, right? Venezuela is way bigger than Iraq and geographically way more complex and has a history of nationalist rebel groups all through the country. You look at the map and Caracas looks very near the coast. Like it'll be easy to, no, it's a huge mountain range between those two things. You have to go through about 2 miles of tunnels to get there. It's prime territory for guerrilla warfare. Nothing about this will be simple. Nothing about this, if the Americans are sincere about occupation, happens without $200 billion, 100,000 American troops, and 10 years of falling on their face trying. I mean, and I don't like saying that, but it's just, that's the precedent that I see. Again, can history teach us anything about this? Unfortunately, it can, and it's not good, right?
Yeah.
But back to rebuilding Venezuela isn't the goal. And so if you're thinking that that's what's going to be attempted here, you're just misleading yourself. It's not, right? I think we'll probably fly back the opposition leader, pop her in power at some point. I don't know. But just think about it through the lens of supply and demand, not democracy, not humanitarian aid, nothing like
drugs,
that. Nothing like, no. Just think about it through the lens of supply and demand. That's all that's here.
All right. Yeah. Appreciate you sharing that. Okay. So, and then do you have an idea of like how long it's going to take to build this out? So Trump did say, okay, we're going to allow our big oil companies to go and develop and such. And so I saw some numbers around $60 billion or somewhere in that range. I don't know the numbers. I'm just learning about this. But how long do you think it'll take to like even build out this infrastructure and dreams that President Trump has?
Yeah, I think the only honest answer is we have no idea what state that infrastructure is in at present. And, we can have good ideas about what it may take to invest and rebuild. But, until Chevron's in there, right, actually scoping things out and coming back with answers, I don't think there's a clear understanding. And either way, again, if there's precedent, it's that we'll be told an optimistic picture. This will be cheaper than we thought, happen faster than we thought. And turns out everybody in Venezuela is on board, by the way. And that's just not going to be the case, right? And so I wouldn't say that I have a decent perspective on that, but I don't think when you open these sort of rat's nest scenarios, when you pluck a leader out from a country that's already dysfunctional, when you open the hood of a car that's not functioning right, typically you find other problems, right? And so I think that's more often how these things occur, is when you look under the hood, you're like, oh my goodness, it's way worse than I thought. And that's probably what's going to happen here.
Yeah, that's definitely, I could see that happening as well. Yeah, it's interesting just in terms of like the sentiment on many different platforms and such around this. Some people are saying like, "Oh, we freed people," and some people are showing like folks are frustrated with this, and it's like, yeah, like not everybody, hated the guy, and some people actually voted for the guy, like whether he rigged the election or not. There's a people group that voted for them. Just same thing with even the United States. I mean, I think Kamala Harris had like multi-millions, I forgot the number, 20 million, 30 million people voted for her. So it's like, it just shows like how pretty much people are just wired to tribalize and such. And so it's been interesting to see that.
Yeah.
So, I appreciate you coming on the show and everything. Let's talk about the Vancouver Resource Investment Conference, where we're going to have even more experts on these topics that we discussed today. Silver, we got a silver panel. We got copper companies that are going to be there as well. And then we got geopolitical analysts such as Colonel McGregor and many others that are coming. So let's talk about VRIC.
Man, it's going to be an amazing show this year, Darrell. I'm so excited for it. And, we're opening up the show. When we were talking about silver, gold equities and investing and allocating capital to the mining sector, we kept on coming back to the people. And so this year, I'm opening up the show with some of the best people in the industry. And actually, I'll open it up with a panel with Bob Quartermain, Ross Beatty, and Rick Rule. And the whole purpose of this is to begin the conversation. That is a 2-day conversation at VRIC, listening to people who have been making money in this business for 40, 50 years. And I want everybody at the conference to listen to everything else they hear through the lens of that experience. Let's start there, right? Because over 2 days, 6 stages, people are going to hear so many forecasts, perspectives, predictions, ideas about where to allocate capital. All that's good and worth considering. I want you to listen to it through the lens of 40 to 50 years of success from 3 very special and successful individuals. And then actually, I'm following that up by bringing 3 entrepreneurs on stage that I believe are the next generation of those entrepreneurs. And this is because back in 2015, when I was trying to figure out how to build my business and what to do here, I actually flew down to Carlsbad and met with Rick. And I sat in his boardroom for 2 hours and just kind of like laid my whole business case in front of him, the challenges I was facing, things I couldn't fix, the opportunities I was excited about, all this stuff. And at the end of the conversation, I just flat out asked him, I said, look, man, if you were in my position right now, what would you do? And, he kind of sat back and thought about it. And then he's like, I can't tell you what I would do, but I can tell you what I did do when I was at this stage in my career. I identified the most promising entrepreneurs in the business, and then I became indispensable to them. And by marrying my career to their careers, that's how I built my success. And so I've always kept that front and center. It was 10 years ago, but I think about it a lot and still do. And so after showcasing 3 individuals who have knocked it out of the park for multiple decades, I'm bringing up 3 individuals who I think are setting the standard for the next generation in our industry. I'm not going to tell you who they are. You got to come to the show to see that. But then I'll be joined by the legend, Robert Kiyosaki, who's going to come on and talk about how he began actually working a booth at a mining trade show, raising capital for a gold company. And that's what led to his journey of what is today, he's still the best-selling personal finance author of all time, Robert Rich Dad Kiyosaki. And he'll be welcoming the audience after that and then sitting down for the headline gold panel. But dude, it's 2 days, 80 keynote speakers. We fly in from all over the world, 6 stages. It's an absolute Super Bowl of macroeconomics, geopolitics, and junior mining finance. And anybody who's got any interest in allocating cash into this business should be there. And so many personalities up there sharing insights.
Yeah, and is there any opportunity for those that can't make it to be able to tap into some of this content?
Yeah, 100% there is. So first of all, We have very active YouTube channels where you'll find all the stuff that happens on every stage published mainly right here on the VRIC media channel. And so, because the biggest complaint I hear from attendees at my conference, Darrell, is triage. They're like, you have 6 workshops happening at once. You got Ross Beatty going up against Grant Williams, going up against, Peter Kraut. Like, how am I supposed to choose? And I get it. It's hard, but there's only 2 days, and I want to showcase a lot of content. So we record everything and publish that after the fact. But for folks that want to watch it in real time, just hit VRIC Media the day of. It's all going to be live streamed. Everything that happens in the speaker hall will be live streamed. We're going to have a broadcast center on the trade show floor live streaming 2 days straight. And so if you're stuck, in Minnesota or somewhere and you can't get to Vancouver, tap into the VRIC Media live stream right here on the YouTube channel, and we'll keep you engaged for 2 days straight, I promise you.
Yeah. Well, you all be sure to click that comment that's pinned. It's the VRIC conference that is coming up, so be sure to click that. That's pinned in the comments. And then, Jay, appreciate you coming on the show. People already know where to connect with you. The Jay Martin Show, obviously VRIC. You're very active here as well, so appreciate you for coming on.
Darrell, pleasure's all mine, man. It's always fun chatting with you.
Yes, indeed. Until next time.